What's up everyone, it's Scotty with MoneyVest. So in this video, we are going to be talking about the technical levels on the S&P 500, the NASDAQ, and all of big tech. So this is going to be a very important video, especially for all the traders out there. If you are trading options, if you are trading in general, just these big tech stocks, this is going to be a very important video because I'm going to identify really important levels for the market and for these big tech companies, which they need to hold. So if you are bullish on the market, if you are a bull watching this video, these are levels we need to hold in case we break down below these levels. Well, I hate to break it to you, but I think we are going to see some more downside in the markets if these levels don't hold up in the market. So I hope you guys enjoyed this video, find it helpful. All I'm asking in return is that you drop a like on this video. Subscribe to the channel if you haven't already for everyday updates and analysis, fundamental analysis, technical analysis, macro updates. We cover it all. So link's going to be down below if you want to join our MoneyVest community. There is a 16% annual discount available till the end of this month. So there's 8 more days left if you want to take advantage of that. And again, subscribe and of course drop a like as well. So this right here is going to be our entire presentation that I'm going to walk you through. I've got lots of charts to break down, and this was again a very similar video that I did on big tech just a week ago, and I think a lot of people absolutely loved that analysis. I went through all the comments and people were really loving the analysis and the technical breakdowns in this format. So I figured I'd do it again and kind of give you guys an update on where we are. Now this is the S&P 500, as we already know and are aware of. This has been the nice uptrend channel. Of course, there was a bit of a red flag here, meaning that we were making lower highs and lower lows. And of course, since then, we had this bear market of 2022, started selling off, and then what happened was this right here is the green rectangle, in other words, the green flag, where we started making higher highs and higher lows, and since then, we have just been on this nice uptrend. Now, what's happened with the S&P is that we are now starting to make a downtrend within the context of an uptrend. What do I mean by that? What I mean by that is that basically we are seeing higher highs and higher lows that are still forming. This is the higher high basically right here. This is another higher high over here. This is another higher high over here. So we are still very much in the context of an uptrend. However, we are making a bit of a downtrend as well. That's going to be this over here, as you can see, for S&P 500, right? That right there is the downtrend that I'm referring to within the context of a bigger and broader uptrend. So what needs to happen is the S&P 500 absolutely at any given time during the next couple weeks here, couple days even, needs to hold this circle, needs to hold this right here is the area. That's the critical area of support that S&P 500 and the bulls basically need to hold in case we break down below this level. Well, that's going to be a problem for the S&P because in the next chart I'm going to show you in a little bit more detail, because that's not only a support from a higher low perspective. So you can see that we have validated this level over here. So I'm just going to turn that into white. So we validated that level here at the beginning of this uptrend. We validated that level here, and that's going to be that next higher low. So number one, that's the higher low, and it's also a horizontal support, right? So not only is it a higher low, but it's also a horizontal support, meaning previous resistance here. We exactly got rejected here back in July, August of 2022. This right here, which in turn became a support, as you can see over here. If you fast forward, we almost got validated here, not quite exactly at that level, but that is going to be a horizontal support as well. And to top it all off, we are also going to be witnessing a lower low. That's going to be the yellow line, right? So you've got this lower low forming, lower high and lower low forming. And guess where the lower low ends up? Exactly at that level. So we've got a confluence on 3 different patterns forming together for the S&P 500 to validate and of course potentially support us at 4,300. So that's going to be a level. Today we are seeing a bit of a dead cat bounce possibility. So right now pre-market, as of the time I'm recording this video, S&P 500, NASDAQ, they are a little bit higher. Futures are green. So it's possible that we see a dead cat bounce after 2 really brutal days. So last 2 days have been really bad for the market. So it's possible that we do see some momentum back higher. But 4,300, folks, 4,301. That's going to be more precisely 4,322, but in and around that range, that area. 4,300 is going to be that level to watch. In case the market, the S&P breaks down below this level, well, then not only are we breaking a higher low, we're breaking a horizontal support, and we are going lower than we did the previous time. So we're continuing on that lower low pattern as well. And that's going to be a little bit of an acceleration for the market towards the downside. So like I said, 4,300, very important level to watch going into today and of course next week as well. This right here is going to be the NASDAQ, so almost an identical pattern setup. The only difference here is that it's already broken down from its higher low. So since the S&P 500 is actually validating and of course on its way down to its higher low inside that uptrend, the NASDAQ is a little bit different because this right here is the overall uptrend, so higher highs and higher lows. But you'll notice that this right here was the breakdown. So this not yesterday but the day before, this right here was the breakdown below the higher low for the NASDAQ, and it's now starting to accelerate that move to the downside. So for NASDAQ, far more better support is going to be this green line that I validated, and that's going to be at 13,150. That's going to be the level and the critical area to watch on the NASDAQ. In my next slide, you should be able to see it a little bit better. So 13,155. And once again, you'll notice that it is not only a horizontal support because we validated that level here. Why do I keep changing the color? There we go. This right here is the horizontal resistance, which in turn became a very nice support, as you can see over here. And that's exactly what we are watching on the NASDAQ at 13,155. And that's also going to be almost a lower low, right? So that's inside this potential downtrending channel. That's exactly where the lower low ends up for the NASDAQ. So those right there are going to be some levels to watch on both the S&P and the NASDAQ. S&P 4,300, NASDAQ 13,150. Now let's talk about some individual stocks, starting with Apple. Apple has 172 as a very important area of support. So if that level holds up, great. If it doesn't, well, I don't know what to tell you. This right here, 172. So we are watching $172 as a very strong support. And I already mentioned the potential red flag here because we are making lower highs and lower lows. Right now, what's Apple doing is that it's validating that support at 172. So it's basically going sideways, right? So bulls are like, nope, you're not going to drop us down below 172. We are going to continue to validate this level. We'll find out today and over the next weeks how long does Apple hold up this level for, and whether it breaks down below this, then of course there's potential for more downside. Lower low next is going to put us down to 150s, 160s, 157 to be precise. That's where my next support is. But in case Apple continues to validate this support, then that's good for the market. And again, right now it's just basically trading sideways. So there's a lot of consolidation happening for Apple right now. 172, every technical analyst and everyone understands that 172 is a very critical level for Apple. It needs to hold it, otherwise we are potentially on our way to 150s. And that's going to put more weight on the markets for more downward pressure. Now, Amazon, as in my previous market update and previous updates on the technical front, I mentioned that Amazon and Google, these are two companies, and even NVIDIA, these are three stocks that are still very much in an uptrend, right? They were making higher highs and higher lows. Amazon more specifically was very much in this nice uptrending channel, and it was constantly making these higher highs and higher lows. Well, guess what? Not yesterday, but the day before we broke down. So this right here was the breakdown candle. We broke down below that level. We also gapped down yesterday and then accelerated that sell-off even further, leaving a gap over here. And now we're starting to make potentially some lower highs and lower lows. There hasn't been a lower high yet. And what I mean by that, a lower high would put us over here. So basically, we are on our way to making a lower low. If you push higher and get rejected here, that would be a lower high, and then we would continue our way to the downside. So that is going to be a lower high and lower low. But right now, we're only on our way to potentially making a lower low. And that support next for Amazon is going to be sitting roughly around 125, 127 area. That's going to be the support level to watch. And right now, we're starting to break down below this, which is going to be at 130, right? So this is the level to watch. And I do believe that there's going to be a potentially dead cat bounce. We go back higher, get rejected at that resistance, and then continue to pull back. And that next support, like I said, is going to be at 125, 126, in line with where we have previously validated ourselves for Amazon. But the bottom line is that this pattern, the uptrend channel, has already been broken for Amazon, unfortunately, right? So this is where we are. Amazon was kind of holding up Amazon and Google were kind of holding up that uptrend, but no longer is the case. So going over to Tesla, and Tesla also very, very, nice downtrending channel within the context of an uptrend. So the S&P 500 and Tesla almost have a very similar and identical pattern. So you can see that, we talked about the inverse head and shoulders as well. We got a little bit of a breakout from that neckline, so that is good. But this right here is the uptrending channel within which Tesla's been trading at. And right now we do have this potential downtrend within the context of that uptrend, right? So this is going to be that lower highs and lower lows. So you can already see that we got rejected here. This right here is another lower high. This is a lower low. This is a lower low. So you can see those 4 points that I just marked marks a downtrending channel. And the Tesla obviously getting rejected at those levels. If it does end up selling off down to this area, which is a very, very important level, low 200s, that is going to be an area of support. Why? Because previous resistance, right? So we got rejected here for Tesla, and that's also a previous support. If you go back further, you'll see that there was also a previous support for Tesla. So I think I have a zoomed in version of Tesla here. So there we go. So that's going to be that confluence of support. And I do want to point out that 212, low 200s obviously is a much stronger area of support considering the horizontal resistance and support. And of course, yeah, this is all resistance turning into a support. But in the meantime, more intermediate, right? More near-term support is going to be in the $240 range. Why? Because if you take a look at the pattern overall, as I mentioned, it's still very much in an uptrend, right? So it's still very much in the context of this uptrend. So that's where the higher low ends up. This is where the higher low basically ends up for Tesla. And you go back in a more, again, near-term capacity, this right here is the support at roughly around $240. So that's going to be a more near-term level to watch for Tesla. That's going to be sitting roughly at around $240, like I said. So this right here is going to be that level. But of course, if you do end up breaking down below this level, so if we kind of continue to accelerate to the downside, well, then we are still very much in the context of this downtrend. And that next support is going to be sitting roughly at low 200s, as I said, 210, 212s inside this green rectangle. So first area of support, 240. That's going to be this confluence right here. A breakdown below this obviously is going to accelerate that sell-off even further, not only for the market, but of course for individual stocks. And that next support is going to be sitting roughly in the low 200s. But right now, as it suggests that we are unfortunately showing signs of weakness for a lot of these big tech stocks. This right here is going to be Meta Platforms, and Meta also is very similar to that of a lot of individual stocks, as we have talked about, trading inside this downtrending channel of lower highs and lower lows. Right now getting rejected at this lower high. Once again, it got rejected here. This right here is a lower low. And of course, if you continue to sell off, the next support is going to be at that lower low, sitting roughly at 260s. As I mentioned earlier, it does have a few gaps that it needs to fill, right? So these are the earnings gaps that it's left. So there's going to be sitting in the 220s, 240s levels, even down as low as 160s and 150s for Meta. I don't know if Meta's going to come down to those levels and kind of, fill these gaps, but definitely the pattern right now on a more short-term basis is showing signs of weakness, making these lower highs and lower lows, and of course getting rejected at those levels. So that's really what we are going to be focusing on, and support level more near-term is going to be sitting roughly at 275. The moment it breaks down below this level, then we are confirmed with the 3 lower lows for Meta. So that's obviously not going to be great for Meta. Now, talking a little bit about advanced micro devices and AMD finally breaking it down after such a long time. AMD for the longest time was obviously in this, very, very modest downtrending channel, lower highs and lower lows. We kind of knew this was going to happen. Like, it was very, very weak, right? So it was already showing signs of weakness by making these lower highs and of course lower lows as well, as you can see over here. 1, 2, consistent lower lows, lower highs. So eventually it did break down here. Yesterday was a brutal day. It was down a little bit over 4%. And unfortunately, the next support is going to be down to $80, right? So low $80 is going to be that next level to watch for advanced micro devices. And that's exactly where I would be a lot more interested in dollar cost averaging and of course selling some puts in the low 60s for AMD as well. But this right here was a breakdown which was long time coming, and I wouldn't be surprised if it does actually move higher today to retest that $100 level. Once again, that $100 was such a pivotal level for AMD, and of course gets rejected and then starts rolling over once again after it gets rejected from those levels, right? So all resistance, all support level could potentially start acting as a resistance. You can see that it's previously acted as a resistance as well for advanced micro devices. So that's the level to watch for AMD, $100. Next one on the list is going to be NVIDIA. Now, NVIDIA is interesting, and the reason for that is because I don't know exactly what that higher high and higher low is going to look like. Higher high, we already know. This right here, higher high, very nice higher high. If you scroll forward, another higher high. So, it's been in that uptrend, so that's good. But a higher low, basically you start in October, and then there's 2 different lines, right? So there's one that's going a little bit further up, and you can see that, basically validates us further up higher here, then breaks down. So this right here can be considered as a bit of a breakdown for NVIDIA from that higher low. But if you kind of take a broader perspective, right, so take that October start, same as what we did for the first one, and then NVIDIA broke down even further here, so that's going to be that second time that it validates. And now if you extend that line all the way, it's kind of coming inside this gap, right, which NVIDIA's left after the earnings, of course, after it gapped up pretty significantly. So it's kind of hard to judge exactly which one to follow along with, because there's like both, there's validation to both. I'm going to go with the second one. And the reason for that is because, this one is a much bigger drop for NVIDIA, and it kind of validated and supported that level. So I've kind of extended that line all the way to 325 and 360s. So that's going to be a much stronger support. So I would still put NVIDIA in somewhat of an uptrend, but it's not really, because it also has started to break down a little bit. So if $400 still holds up, then yes, we can argue that, it is still in a bit of an uptrend. But of course, if it does break down below $400, which, right now we're kind of looking like we're approaching that level, then it's possible that we start making these lower lows as well, right? So that's going to be that low, and then we just printed a new low, and this right here is going to be that downtrend. So NVIDIA would be very much in a downtrend within the context of a broader uptrend. So again, very similar to S&P, very similar to Tesla, for the pattern. So that's the level to watch. $400, very, very important level. In case it breaks down, well, we're looking at the gap fill down in 320s and 360s for NVIDIA moving forward. Talking about Google now, and Google here, no, this is NVIDIA. So NVIDIA we already went over. Again, I just wanted to point out the RSI and the MACD also coming down to pretty oversold levels. So I think $400 buyers, there's possibility that they step in and get scoop up some shares at those levels at $400. Now, Google, similar to Amazon, as unfortunate as it is starting to already break down now. So this right here, we talked about in our previous updates that, look, it's converging into this pattern. I don't feel confident with this, pattern overall, because it's coiling in, and usually these rising wedge patterns don't end well. And that's exactly what happened. I mean, we saw a little bit of a breakdown here for Google, and next support is going to be sitting right here. That's going to be at around $126 per share. For Google, I would not be surprised if we do end up at that level. And of course, if we do break down further, the next support is going to be sitting right here at close to $114, $118 range for Google moving forward. Right now, of course, RSI was a little bit overbought. We're starting to see that breakdown here for Google. So like I said, next support is going to be sitting roughly at 126 for this company. So last but not least, we got Microsoft, and Microsoft here continues to trade in this downtrend. So this right here is the lower high and the lower low for Microsoft. Again, we talked about this, pattern overall that it's showing signs of weakness. So $311. So this right here, $311 is going to be that support level to watch for Microsoft. So right there is that support if it needs to hold up. If it doesn't, well, guess what? We are continuing on this downtrend, and it's possible that we make that lower low as well, and lower high continue. So that downtrend will continue for Microsoft. So that's where we are with the overall big tech, and of course the entire market, S&P 500 and the NASDAQ, some of the technical levels to really be paying attention to. Let me know your thoughts down in the comment section below. Hopefully this was easy to follow and easy to understand. And the bottom line is we are at a pivotal moment, right? So tomorrow, today, Friday, and next week are going to be very, very critical for the market from a technical standpoint. And that's really what's going to dictate where the market ends up going in September, and of course in the fourth quarter that we are going to start in a few days. But critical levels: S&P 4,300, NASDAQ 13,155, 13,150 roughly. So those are levels to watch. And of course, there's a lot of weakness brewing among big tech stocks as well. So I hope you guys enjoyed this video, found it helpful. Make sure that you drop a like. Don't forget to subscribe to the channel. Link to our Discord, Patreon is going to be down below. So always happy investing. I'll see you all in the next video.